Hello?
Yeah,
Let me start.
okay.
So we have this paper one. Yeah, they said, which document issued by the seller summarizes the transaction for the month? When you talk about summarizing of transaction for the month, that means at the end, whatever transactions you have done with your business, that means you as, they said, which document issued by the sellers? That means the supplier. Whatever transaction your business has done with your suppliers, the total, the summary of all will be recorded, will be submitted by the supplier to you as a business at the end of the month. So which amongst this will the supplier give to you as a business? The question is saying you as a business, you would have had different suppliers. So what document will the supplier give to you or issues to you at the end of the month? That is the question. Do you get it now?
Yes, I get it.
Okay, so it's not a credit note, because a credit note will be issued when you are returning a good, when you are returning a product to the supplier. That means you issue a credit note to say that, oh, you are returning this product to the supplier. That is why you issue a credit note as a business. So it's not going to be a credit note. Purchases invoice, it's not a purchase invoice, because a purchase invoice is issued when you buy from your suppliers on credit. Are you with me?
Mm-hmm. It's the statement of account,
Thank
right?
you. Statement of account. Yeah, it's statement of account. The sales invoice is issued to your credit customers. So the answer is D. Is it clear? Clear, right? Hello?
Yeah.
Okay, great. Question 2, they said, which is not an accounting concept?
Yes, it is.
What? Can you hear me?
Confidentiality, right? Yeah, I can hear you.
Okay, great. So for question 2, it is what? We have business entity, which is an accounting concept. We have consistency, which is an accounting concept.
Confidentiality.
Materiality is also an accounting concept. So the answer is B, confidentiality. It's not an accounting concept. It's an ethics.
Mm-hmm.
It's an accounting ethics. Okay. Are you with me?
Mm-hmm.
Okay. Question 3. It said, which of these accounts always has a credit balance? Do you know what a credit balance is? It said, which accounts always has a credit balance?
An idea of it.
Okay. So which one is it?
It's as I think it's D.
D, discount received.
Yeah.
Yeah, great. Got
Mm-hmm.
it. Yeah.
Good.
We go to question 4. He said, which accounts are maintained in the payables ledger? We're talking about payables ledger. We're talking about the suppliers that you have to pay, your suppliers. So which accounts will the payables ledger maintain? Is it the creditors? Is it the debtors? Is it purchases or sales?
Creditors.
Creditors, because your creditors are your suppliers. Great. Question 5. Said, which statement is incorrect? Asset equals to liabilities plus capital. Capital equals to asset minus liability. Capital minus liability is asset. Liability equals to asset minus capital. Which one is not correct?
Is it B?
No. Look at it. Asset equals to liability.
No.
Normally, asset is capital plus liabilities. So if asset equals to liabilities plus capital, then it can also mean that capital equals to asset minus liabilities when you collect like terms. When you collect like terms for capital, it means plus capital equals to assets minus liabilities. So B is correct. Are you with me? Do you get what I'm doing or not? So I should explain again. Hello? Are you there?
Can you explain it again?
Okay, sure, I can.
Yeah.
The form, in accounting equation, we call it accounting equation. We have asset equals to capital plus liabilities, which is A, okay? So which one of amongst them is not correct? If asset equals to capital plus liabilities or asset equals to liabilities plus capital, then we can make capital the subject. Capital could be the subject of the formula. So capital comes here. If capital comes here or stays on the other side, liabilities move to the left side. Yes or no?
Yeah.
So if liabilities move to the left side, it means liabilities will have negative, assets will have positive, then capital will have positive. Yes or no?
Yes.
So B is correct also. Then we check C. C here is making assets the subject. If
So
asset is positive
so
here,
B is correct.
B is correct. I mean C
B
now.
is correct.
I'm talking about C now.
C is the incorrect one.
Yeah, C is the incorrect one because assets, here you have capital minus liabilities. It should be capital plus liabilities. Is it clear? Is it clear, please? Yeah. What you have to take note is the accounting equation. Accounting equation is asset equals to capital plus liabilities. So there you can interchange those items. You can interchange assets, you can interchange liabilities, you can interchange capital. Clear? Is it clear, please?
Yeah, clear.
Yeah. Go to question 6. It said, which should be entered on the credit side of the trade receivable control account? For the trade receivable control account, we're talking about the customers here. So which account will you record on the credit side of your trade receivable? We have trade receivable control account. We have trade payables control account. Trade receivable is for the customers. Trade payables is for the suppliers. So what will you record on the credit side of your trade receivable control account?
The discount allowed.
Great, discount allowed, yes. Go to question 7. It said, what is the effect if capital expenditure is treated as revenue expenditure? If capital expenditure, that means, what are capital expenditures? Expenses on equipment are capital expenditure. Revenue expenditures are expenses, day in, day out expenses of the business. So if instead of you to record, they said, what is the effect if capital expenditure is recorded as revenue? So instead of you to record capital expenditure, you treated it as revenue expenditure. For example, there's motor vehicle. Purchase of motor vehicle is a capital expenditure. Are you with me? So if you purchase motor vehicle, it is considered as capital expenditure, but you mistakenly record it as motor expenses. That is what the question is saying here. Motor expenses, like maintenance, is a revenue expenditure. The purchase of motor vehicle is capital expenditure. There are two things there. When you purchase a car, it is a capital expenditure. The cost of maintaining that car is a revenue expenditure. Do you get the difference here? Okay. So if you mistakenly recorded motor vehicle as motor expenses, what effect does it have in your financial statements? Gross profit overstated? No, because gross profit is part of your trading profit and loss accounts, trading accounts. So you're not going to see it there. It's not going to be about gross profit anyway. It can't be your gross profit. So we check the profit for the year. For profit for the year, we have, if you mistakenly record your capital expenditure as revenue expenditure, it means that the profit for the year will be understated. That means, you have incurred an asset. Instead of you to record it in your statement of financial position, you recorded it in your statement of profit or loss. So if you have recorded what you are supposed to record in your statement of financial position, in your statement of profit or loss, as an expenses will reduce your profit, yes or no?
Yeah.
Do you get the point here? It is an asset. You recorded it as expenses. And if you have recorded it as an expenses, it's going to be in your statement of profit or loss and comprehensive income, where you calculate your profit for the year. So if you have recorded what you are supposed to record as an asset in expenses, it means your expenditure will increase. And if your expenditure increases, your profit will be understated. Your profit will reduce, isn't it?
So the answer is D.
D, yes, the answer is D. Is it clear? All right. Question 8.
Yes, it's clear.
Question 8, they said, identify when a customer would receive a cash discount. Why will a customer be given a cash discount? Note, there's a difference between trade discount and cash discount. When you talk about trade discount is as a result of you buying in bulk. Cash discount will occur to a business.
What is bulk?
Bulk, that means you're buying large quantities. Do you get it?
Yes, I get it.
Okay. So when you buy in large quantities, you might be given a trade discount. But the question is saying, in what situation will a customer receive a cash discount?
Payment made within agreed time?
Yes, because on your invoice, there is a stipulated time you have to pay back. So if in your invoice, part of the items of the invoice, there is an item called cash discount, or 5% cash discount. You have access to that if you pay within the stipulated time. Do you get it? Do you get it, please? So you are given a cash discount to encourage you to make your payment promptly. So businesses are given cash discount to encourage them to pay as soon as possible. Is it clear?
Yes.
Okay. We go to question 9. For question 9, they said, where is the total of the discount column on the debit side of the 3-column cash book posted? For 3-column cash book, it means we have a column for cash, a column for bank.
What is the 3-column?
I'm going to explain. Hold on, please. Okay, question 9. They said, where is the total discount? Okay, your question was, what's the 3-column cash book, right?
Yeah.
Okay. For a 3-column cash book, we have a cash book is an account that states the income and expenditures of a business. That means, but when we talk about income and expenditure, it means the business made the payments to suppliers, and at the same time, the customers made their payments immediately after the transaction. That means whatever you buy or whatever you sell, you receive your cash or you paid the cash. That is why you open a cash book. It's different from opening a ledger. When you open a ledger because there are transactions that were done on credit. Did you get the point here?
Not
transactions
really.
are done, I'm going to explain again. When transactions are done on credit, you open a ledger, either sales ledger or purchases ledger. But when transactions are done in cash payment or check payments, you open a cash book.
So what's the 3-column?
So another type of cash book is a 3-column cash book. Why do we call it 3-column cash book? We call it 3-column cash book because it has 3 columns: a column for cash, a column for bank, a column for discount allowed. Do you get it? which will be on the debit side. And on the credit side, we have a column for cash, a column for bank, a column for discount received. We have discount allowed, discount received. So on the debit side of your cash book, for 3 columns, you have cash, bank, discount allowed. On the credit side of your cash book, we have cash, bank, discount received. Is it clear now?
Yeah.
All right, so the question is saying, where is the total of the discount column on the debit side of the 3-column cash book posted?
Is it C?
C, yes, that was
C.
I explained now. It's C. Good.
Yeah.
I think it's clear, right?
It is.
Okay, we go to question 10. It said, what is the effect when a trader does not account for rent paid in advance? What is the effect when a trader does not account for rent paid in advance? Rent paid in advance means you paid ahead of time. Do you understand? Your rent is supposed to due in July. You paid until December. Do you understand?
It does not affect, it does not affect the gross profit. So I think it's
No,
D.
it's not. It's not even about gross profit, or because your gross profit is part of your statement of profit or loss. So it is not part of it.
So the answer
is
is D.
After your gross profit. It affects your other receivables. Are you with me?
Yeah.
If you did not account for it, your other receivables will be understated.
Yeah, that's
you're supposed to, you've paid rent, but you didn't record it. You didn't record it. Because you didn't record it, it means you won't remember. That means you have forgotten that your landlord is owing you. So you'll be understating your other receivables. Is it clear?
Yeah, it is.
All right, good. We go to question 11. Yeah, this is an invoice. Are you with me?
Yeah.
Yeah, this is your calculator. I have it here. So I'm going to give it to Mr. Fuad tomorrow, okay?
Yeah, I borrowed my sister's for now.
Ah, okay, good. So these are an invoice. This is how an invoice looks like. Are you with me? You know, I told you there's always an item for discounts. We have trade discounts as 15%, right? Then we have 2% discount for 30-day settlement. So this was to encourage you to pay promptly. So if you have agreed to settle your debts within 30 days, you have 2% discount, cash discount from your total sales. Is it clear?
Yeah.
Now, I'm just explaining the other question to you. Now, let's go to this question. We're told to fill in this, we are told to fill it, right? So the question is, they said complete the document. Do you see the question, complete the document?
Yeah.
So we have description, the quantity, unit cost. So for the unit cost, the total cost will be unit cost multiplied by quantity. So for filing cabinets, it's going to be 64.55 multiplied by 8. 64.55 multiplied by 8. So we have
it's
$516.40. Then for the office chairs, we have 22 multiplied by 19.80. That's 435.60. Do you get that?
Yeah.
So the subtotal will be this 435.60 plus 516.40 So the subtotal is $952. $952. Now, there's a trade discount of 15%. So it will be 15 over 100 multiplied by 952. 952 multiplied by 15 divided by 100.
15 over 100?
Yeah, divided by multiplied by 952. So it is 142.8. 142.8. You take it away from 952 minus 952. So you have your total to be 809.20. Is that clear? So that's it. So if you are told, maybe in your exams, they might ask you that if Frank pays, what's the name? Yeah, Frank waits. Yeah. If Frank pays within the 30 days, what amount is he going to pay? So it will be 2% of 809. Do you get it? So it will be the cash is supposed to pay 809.20. But if he pays within the 30 days, it will be 2% deduction from the total cash.
So it becomes 17% discount?
No, it will be 17% discount. It will be 2% of 809. You have to do it separately.
So there's, oh, okay.
So if he pays earlier than expected, he's going to have 2% discount. Is it clear? Okay, shall we move on?
Yes.
Right. So we go to question 12B. Okay. So for question 12B, they're talking about book of original entry. So book of original entry, what does it imply? It implies that business transactions that are done are recorded initially in the journal. So recorded transactions, whatever transaction you do, you have to record it initially. That means at the point of you doing the transaction, you have to record it. That's why we call it book of original entry. It means that the transaction that was done by the business has been recorded initially. Is it clear?
Yes.
So now the question is saying, state the book of original entry for each of these transactions. Sales to a credit customer. When you sell to a credit customer, you open a sales journal. So the book of original entry for a sales to credit customer,
so it's
sales day book or sales journal. Do you get that?
Yeah.
Return from a credit customer, that's sales returns. We open a sales returns day book.
What's the difference between daybook and journal?
They are the same. It's just another name for journal.
They are the same.
Yeah. Okay. Then you open purchases. For purchases from a credit supplier, you open a purchases day book. Okay. Are you with me, please?
All right.
Okay. Then purchases of a non-current asset on credit. A non-current asset on credit,
Yes.
You open a journal.
Why?
For a non-current asset, they are nominal. You don't have this, you can't open a ledger for this because it's an impersonal account. It is an impersonal account because it's about names cannot be used for them. They are names of assets or names of equipment, so you don't have a ledger for it. You put it in a journal. And the last one, payments to a credit supplier. You make payments. That means you are using a cash book. I told you earlier. Is it clear?
Yes.
Oh, boy, great. We go to question 13. For question 13, they said on 31 December 2019, Lewin sold a motor vehicle, cost 20,000, with a carrying value of 16,000. The proceeds of the sale, 16,400, was received by check. Prepare the disposable account for the year ended. To prepare a disposable account, the first thing you have to do is to find the depreciation. So here, this is disposable account. The debit side is on your left side. The credit side is on your right side. On your debit side, the account transaction should be on 31st of December. So you write on the date, you write 2019, then December 31. Then the motor vehicle cost is
Where
20,000.
on the left or the right?
On the left side, that's your debit side. On the left side, your debit side. Where the icon is here, on the debit side here.
Mm-hmm.
Your left side is your debit side. Your right side is your credit side.
Mm.
Okay, so 2019, you record 31 December 2019. Then on the debit side, you put motor vehicle there. The cost of 20,000. Motor vehicle, details motor vehicle, amount 20,000. Are you with me?
Amount 30,000.
20,000. The cost of motor vehicle on the debit side.
Yeah.
So on your credit side, again, you write date 2019, December 31. The difference between
On the credit side.
on the credit side now, the difference between the cost of the vehicle and the carrying value, the difference between them will be your provision for depreciation. Listen, the carrying value, the difference between the cost of an asset and the carrying value gives you the provision for depreciation. So your provision for depreciation will be 20,000 minus 16,000, which is 4,000.
14,000.
For 20,000 minus 16,000, 4,000.
4,000.
So on the
4,000.
credit side, you write date 31 December, then you write provision for depreciation on the credit side, which is 4,000.
What's the detail?
Details, provision for depreciation of motor vehicles. Motor vehicle was bought, right? You
Yeah.
have recorded motor vehicle on your debit side. The carrying value
What's
for
the
the motor
provision
vehicle,
of depreciation?
yeah, provision for depreciation on the credit side for motor vehicle.
No, but what's the definition of that?
What?
What's the definition of depreciation?
Depreciation is the wear and tear of an asset. The wear and tear of an asset. How, when you buy an asset, as time goes on, the value of that asset will start coming down.
Mm-hmm.
So that is depreciation.
Mm-hmm.
So the asset was bought for 20,000. It was sold for 16,400.
Mm-hmm.
But it has a carrying value of 16,000. So the carrying value is telling us that there's provision for depreciation. So your cost minus your carrying value gives you your depreciation.
Mm-hmm.
All right. So on your credit side, you write provision for depreciation 4,000, and you write the sales. It was sold with a bank check
on credit.
On the credit side, that's 16,400. Do you get that?
16,400.
So 16,400 plus provision for depreciation, which is 4,000, gives us 20,400. So the total on your credit side will be 20,400. Are you with me, please? So on your debit side, the total is 20,000. So the difference between your debit side and your credit side will be 20,400 minus 20,000, which is 400.
400.
So 400 will be your income statement. So on your debit side, you write income statement 400 to balance the account.
Mm-hmm.
So the difference between the credit side and the debit side is 400. So you write 400 in the amount, and the details will be income statements.
Mm-hmm.
Is it clear?
Yeah.
So they said state one cost of depreciation. You're asking me what the meaning of depreciation the other time, right?
Yeah.
So the causes of depreciation are: one, wear and tear could cause depreciation. Depletion can cause depreciation, and passage of time. As time goes on, your laptop will start diminishing. The value of your laptop will fall. So passage of time will cause depreciation also. So if you are buying a car this year, in the next 5 years, it will not be the same value anymore. Yes or no?
Yeah.
So that is passage of time. So these are the causes of depreciation. Clear?
Yes, clear.
Go to question 14. They said, state 2 reasons for maintaining a trade payables ledger control account. A trade payables ledger control account, we are maintaining it because 1, we want to check the arithmetic accuracy of our suppliers. And 2, we want to ensure that there's no fraud in the business. You know what fraud is? Diversion of fund.
It's like embezzlement.
Embezzlement, thank you. We got that. Great. So we go on. We have question 14B. Are you there?
Yeah.
So we have said here we have credit supplier. So definitely we are preparing a trade payables ledger control account. Trade payables control account. Are you with me?
Yes.
So for this information, we have the balance at, hold on please. So the balance at 1 March 2020, which is 16,250, will be on the credit side. So for your trade payables control account, you have the debit side and the credit side. So your debit side, what do you have on your debit side? You have purchases on your debit side. Purchases, credit purchases of, you have the credit purchases, right? On your debit side, you have purchases. You have purchases returns on your debit side, 615. Purchases returns. Do you see that?
Yeah, so I start with purchases returns.
Yeah, it will be on your debit side, 615. Your trade receivable ledger balance set off. It will be on the debit side. 465 on the debit side, yeah.
Where is 465?
On the debit side.
Where is it in the paper?
Yeah, 465. Can't you see it there? 465 here.
Oh, there.
Yeah.
Oh, I didn't see it. I didn't
Did
see
you see
it.
it now?
That's the purchases returns?
No. Purchases returns
No.
is 615. I'm talking about what we have to post on the debit side of our trade payables control account. So let's talk about the credit side, the debit side first.
Debit side.
The debit side, yes.
Yeah.
So the first thing on your debit side will be your purchases returns day book, which is 615. Then we have the journal set off. Trade receivable ledger set off, 465 is going to be on the debit side. The payments you made, because your supplier will receive, you would have paid your supplier. And when you paid your supplier has received, it will be a debit balance for your supplier. So your bank will be on the debit side.